Hi, I'm Ruben Wilcock. I head up ventures at Blackfinch, and today I'm going to talk to you about how we make investments into early stage technology companies, how we find really good opportunities that have great potential for growth. I'll talk to you a bit about our team. I'll talk to you about our external network of venture partners who put lots of added value into the companies after we've invested in them. I'll explain about how our EIS and our VCT products sit side by side to help companies throughout their whole life cycle, and how we construct a portfolio to make sure we're diversifying risk, about how we think that ESG is just a very important part of everything that we do in Blackfinch today. I'll talk about our process, about how we do really rigorous tech due diligence, about how we make sure we put clauses into our legal agreements to make sure that we're well protected after we've made the investments. And then finally, I'll talk to you about some of the companies that we've invested in, what we've done when some things have gone wrong, but also some of the companies that we're super excited about. So Blackfinch is an investment specialist that has a heritage dating back over 25 years. We've got over 400 million assets under management today, and we're specialists in tax efficient early stage investing. We've got experience in SEIS, we've got experience across renewables, property and AIM. So I head up the ventures side of the business. So we're looking for early stage tech focused businesses that can really make a difference in the world, disrupt their markets. We're looking at businesses in markets that are growing, that are typically over $1 billion in size. And we're looking at the metrics that they have to show that they've got evidence of product market fit. So the founders that we look for, they're normally very, driven, very visionary. They're able to attract great people to their companies. So important they can do that. And we're looking to diversify risk over sector and stage. So the basic headlines of our product: the target return 3 to 5 times. It's a growth objective, 3% portfolio establishment fee. We've got an AMC of 2% per year, which is pretty standard across the industry, but it is capped at 4 years, which is really important to understand that. Our performance fees are 20%, again, quite standard, but there's a 130% hurdle. So we won't take a performance fee until we've got you 30% on top of your original investment. There's a minimum holding period, just like everyone else, of 3 years for EIS tax relief, target exit period of 4 to 7 years, and that's typically through a trade sale or an IPO. So what about the team? Well, Blackfinch Ventures team is quite unusual. All of us have got founder experience. We've all set up tech companies. We understand what it's like being on the other side of the table. We're lucky in ventures because Richard Kirk, who's our CEO and founder at Blackfinch, he's very involved in the venture side of the business, and he's a great entrepreneur himself. So we've got that spread all across the team. A bit more about me. So I have a background in academia, in startups and startup acceleration. So I have a PhD in chip design. I've been an author of 50 or so academic papers across many areas of technology. I sat on the intellectual property panel of the biggest engineering faculty in the country for about 6 years, helped to commercialize, patent license, spin out technologies in that position. And then I founded my own tech startups. I founded 4 tech startups. One of them, that was called Judo, was acquired at the end of 2014. I then set up and founded an accelerator called Future Worlds Accelerator, which has helped about 50 to 60 tech companies over 4 years whilst I was there. So really good experience, but by no means just me. So Nick on my team, similar, great experience setting up his own companies, also leading a global team at Nokia as well. Now, the team does not end at that team I've just talked about. We have a big network of external venture partners as well. We use these copiously once we've made investments into companies. So let me tell you about 1 or 2 of these now. So we have Seb Chakraborty. He's currently CTO of GoCompare. He was previously CTO at British Gas Hive. You might have a British Gas Hive product on your wall at home. Exceptionally talented, very experienced, brilliantly connected. He's been a great help to some of our companies. Bulent Osman, he's on 3 of our boards right now. He's got 30 years of experience in enterprise software. He founded his own technology company called Staff Connect, which sold to a US private equity firm in 2019. So he's really been there and done it before. Similar with Ashley Unit, launched New Voice Media. That exited for 350 million in 2018. So a really good external network that augments our internal team to create a very sort of powerful group of people to help these companies succeed. So how does it work? Well, this is a graph of the life cycle of an early stage tech company, which I really like talking through because we're very passionate about these companies. So early on the left, if you look at the line, this red line really represents growth, it represents success. It might be revenue, it might be user numbers, but it represents success. And typically when you first set up a company with one or two other founders, you're trying to create what we call a minimum viable product. That's something that creates value for someone that they'll pay for, okay? And you might make lots of different MVPs, as we call them, until you get one that works. And we don't invest at that super early stage, which is really SCIS, not EIS. And that's normally where angels and friends and family invest. And then once they get to a certain point where they've now got a product that really clicks with customers, that's the point where they start to go a little bit up that cusp, that little break point in the curve, and start to generate more revenue, their metrics go up. And what we're looking for really with the EIS Ventures portfolios is those companies that have now got product market fit. Quite subtle to detect them sometimes, but because we've been on the other side of the table, we've done our own companies, it's a bit easier for us perhaps. So we invest in those companies that have product market fit, good evidence of product market fit, that are on the cusp of their growth in EIS Ventures portfolios. And you might be aware we also have a VCT, so we have the Blackfinch Spring Venture Capital Trust, and that's placed just beyond that on the growth curve. So this is at the point where they really know what they're doing and they're growing as a company, and it's well placed to do a follow-on investment from the EIS portfolios. And so those two products, the EIS and the VCT, fit very nicely together. But how are we different? What makes us different to the other managers out there? Well, one of the things that we've recently done, which we're very proud of as a group, is we have now adopted ESG policies across all of our investments. Okay, so we're a signatory to the PRI, which is the Principles for Responsible Investing. And what this means for ventures, for Blackfinch Ventures, is that we invest in technology that we think can really make a difference in the world. Okay, so we evaluate the environmental impact of the companies we back. We look at the companies and make sure that they're creating societal growth, they're making job creation. And then with our venture partners, when they sit on the boards of those companies, that's driving strong, sustainable governance. So we're looking to invest in companies that really make a positive impact in the world and do that in a sustainable way. When we build our portfolios, we build a diverse portfolio to reduce risk, and we do that across both sector and stage. So what that means is we don't put all 10 of your chunks of investment into the same type of company, a cryptocurrency company. That would be a bad idea. That one sector fails, all of your investments go down. What we do is we spread those investments across many different subsectors of technology. So it might be wearables, software as a service, marketplace, ed tech, prop tech, all these different areas. And that means that if you get, and this is so important right now with coronavirus, you've had some sectors that have been really badly hit. And if you're too concentrated in that sector, you would have taken a big hit. But we're spreading our investments across many different subsectors of technology. We also spread them across stage as well. So that means we will make some more risky investments, earlier stage investments that kind of in all or nothing companies. Okay, but we'll do that because the potential of the return is very high, but then we'll balance those against less risky investments that are in slightly later stage companies that are a bit more controlled, better handle of everything, although the return multiples might be slightly lower. And we use these techniques to create a portfolio that's nicely balanced, that gives a really good chance of a successful outcome. So what's our process internally? I think it's really important to tell you, because there's a few things that we do differently. The first stage around deal flow and filtering, we have a dedicated pipeline team. So we look all across the UK, not just in London, and this team, they do this day in, day out. They're very good, they're specialists in finding pipeline and deals. And it stops introducing bias into the process by having a dedicated part of your team that does that, because I don't go out, meet a founder, like them, and then a bias creeps in and that gets pushed through the investment process. We look in all the usual places, accelerators, universities, our networks, our referral networks, all the kind of usual places that everyone looks at, but we also use a cutting edge research platform. And this lets us go proactively out to companies. There's about 25,000 startup companies on this research platform. We can proactively approach them if we think they've got all of the kind of indicators for good success. So we see probably about 2,000 investment decks a year, and we have daily meetings to progress those forward into our process. And if they do really well, then they'll move forward to a pitch process. Now we're quite well known, we're quite famous now for our very long pitches, and we do this for a very good reason. So pitches at Blackfinch normally last about 3 or 4 hours. And the reason we do these long pitches is that you hear very quickly in the first hour or so the very polished, good veneer description of what the company does, and they answer the questions. The founders answer questions in the way that they've answered it for thousands of investors before. But what we're doing is we're really extending that. And so we get beyond that initial kind of veneer, and we get much more into the details of the company, the skeletons in the closet, what's really working, what's really not working. We find this is a great way to find out far more about the company, and actually founders really enjoy it. So we often get comments after this process saying, wow, this is the biggest grilling we've ever had, but it's been really great. We can see that you really understand what you're doing. And because of our tech backgrounds, it's not just me that has a PhD, one of my other senior managers has a PhD as well. We're able to go into that tech detail in that pitch. So once we've gone through that pitch session and we decide to go forward to a term sheet, then that will have to be approved at the first IC approved investment committee approval stage to move to term sheet. Then we move into the due diligence stage. So we do a few things differently here. So we make sure that all of our investments for the EIS are checked with an external specialist advisor, the gold standard in the UK, Philip Hare, to make sure they're EIS qualifying. We do all the usual company due diligence. We've got a big long table, a data room, over 70 points of due diligence that they have to fill in and we examine. But we go really to town on the technical DD because we like to go in with our eyes open. It's not about working out whether or not this company is perfect, none of them are, but you really need to know what you're dealing with. So we send an external sector expert or a sector expert from our team into the company for a day with me to really dive into not just the high level design of a system, but all the way down into the code level, security, how well it's documented, so we know what we're dealing with. Now in the documents, we use a couple of techniques to make sure that we are protecting our investment going forward. So we're investing in teams. This is all about investing in teams. And the worst case for us is that we invest in a team and that team sort of leaves after a few months. And so what we do is we make sure that the founders are revesting their shares. So if they do leave, then they'll lose some of their shareholding. Now that's great because it incentivizes them not to leave, and it makes sure that if they do, then we've got some shares that we can issue to the incoming replacements for them. We also make sure we've got investor consents in these deals so that we have veto rights over certain decisions, and EIS protections, of course, in the shareholders agreement. We write a big paper, it's normally about 30 pages long for the investment committee, and then they go through this approval process. It goes back and forth and we answer any questions they've got, and finally they'll approve that the deal progresses. Once we've made an investment, then clearly it doesn't stop there, it only really starts there. So the first thing we do is we set up the monitoring. So what we'll do is we'll work with the company, they'll send us their monthly financial information. We will have identified KPIs, key performance indicators, metrics that we can also get from them on a monthly basis so we can track their growth. We'll appoint a venture partner to their company so they sit on the board of the company, they're adding loads of value to that company. We'll also put one of our venture managers or me onto the company as a board observer. We have a partnership with Amazon Web Services, and the whole world runs on Amazon Web Services. It's basically the cloud. And we have a partnership that means that our companies we invest in, they get up to $100,000 worth of credits, which is really great for them. And then we do their quarterly updates for clients. So what does this mean in terms of the companies we've invested in? Well, let me tell you about a few of them now. So Tended is a great, really early stage company we invested in back in April 2019. So they're a safety and security wearables company. They make a kind of wristband that can detect your movement, and they use clever algorithms to tell whether you have had a fall, whether you've had an accident, whether you need to be helped. And big companies, big enterprises, they have a duty of care to their factory workers, their lone workers, their people out on the road, to make sure they are looking after them, and that's exactly what Tended can help them with. So they have a dashboard they can go to see whether anyone needs help, where they are, what they're doing. And then Tended have responded, as you'll find out in the COVID update, exceptionally well to coronavirus, and they've brought in a whole new product to help deal with that. Science is a slightly later stage company we invested in, which is a good example of how we diversify over stage. So Science was doing well over $1 million a year when we invested in that company, and that's a business-to-business marketing intent platform. So what they're doing is they're taking all of the details about how people are looking for products on the web to help companies that sell software target the right potential buyers. So if you sell a CRM type of software, relationship management software, then rather than emailing 20, 30,000 people to get a tiny conversion rate of those people that are actually looking for that software at that point in time, you can use Science to laser focus and show you who is interested in this software today, where are they on the buying intent cycle, and then your conversion rate goes through the roof. Now they've done really well. We've helped them to structure their executive team. Bülent Osman, who I spoke about earlier on, he's now involved in that company, helping them get their sales, really efficient, really optimized with his experience. And that's a great success story of how we've helped them with some of that governance that we talked about to do really well. So that company's been growing during coronavirus, which is excellent, and we're very excited about what it's going to be doing next. Spotless water, if you've had your windows cleaned recently, it probably would have been with a pole system. So that's a long pole with a brush on the end with water that squirts out. Well, it turns out that water can't just be tap water, it has to be ultra pure filtered water. And what that means is that it won't leave streaks on your windows and it almost sucks the dirt off. Now there's only one national network that can produce that water, and that is Spotless Water. And they have these stations which look a bit like shipping containers where you can just go off and dispense spotless water. You can dispense ultra pure filtered water into your window cleaning van, pay with a card, and off you go. And this network is growing all the time. It's a brilliantly reproducible business model, and they've grown exceptionally well since we made the first investment in April. So we're excited about Spotless Water. Again, a slightly later stage company. Staff Circle, a slightly earlier stage company. So the founder of Staff Circle, very experienced. He's exited companies before. He knows what he's doing. He's set up a brilliant HR employee engagement platform that lets you communicate not just with your desk workers, but with all of those workers that you might have if you're a big construction company, out of work sites or out on the road, or engineers doing trips, because not everyone does sit behind a computer or even has access to a computer. You've got thousands, millions of people around the UK who still need to do appraisals and all of those HR processes, but they only really have a phone. And so they're optimized for supporting those people. And they've been growing nicely over the coronavirus period, which is really good to see. And we'll be definitely supporting that company going forward to help them get to the best potential they can achieve. And then Move Bubble is another great EIS investment. So this is one of the top property rental apps in London. So you might have seen this brand around. It has very good brand penetration in London. It's a fantastic app. You should download the Move Bubble app today. You'll see it's very addictive. It's very easy to look at the video walkthroughs of properties, to just flick over to see the different rooms, to see the next property. And what they do is they take that data and then they leverage it on the build to rent side to help developers build the perfect properties with the right bedrooms, the right bathrooms for the maximum yield. And that's worked really well, but they're also now commanding more of the overall transaction process. So what that means is you can go and you can view a property all through the app, you can transact on a property for rental, you can put your holding deposit on, all on the app. So hopefully that shows you how not only the fees of our Ventures EIS portfolio service are competitive, because we've got the AMC only for 4 years and the performance fee has got a hurdle of 130%, but also that the team is very experienced. We've got PhD level tech experts on the team. We've got those venture partners who have sold companies for hundreds of millions of dollars. One of them is a CTO of Go Compare. They've really been there and done it before. And then our process is very, very rigorous. So we have those long pitch sessions where we get to discover the skeletons in the founders' closets. We get to do the super deep dive on the technology when we go in there for a day. We look at the EIS qualification of the company through this gold standard industry expert externally. And we do all of those things, but we also look at the environmental, social and governance aspects of the companies we invest in, because we want to invest in companies that are making a positive difference in the world, that are doing it in a sustainable way. And hopefully the track record that I showed you gives you a glimpse into our portfolio to show you how that's really coming to life.